The Investor's Market Guide is designed to provide you with timely investment and financial planning information to help you achieve your financial goals in the most efficient way possible. As we head into May, the news is still largely dominated by COVID. We are seeing cases and fatalities dropping significantly in the U.S. as vaccines ramp up across the country. Based on this chart, you can see we are only a few months, potentially even weeks away from reaching herd immunity, which should allow for the economy to continue to open up. However, variants of the virus in other parts of the world, such as India, continue to be a concern. As a result of COVID, the federal government recently passed the $1.9 trillion American Rescue Plan. Included in the plan were $1,400 direct payments to consumers based on income, expanded unemployment benefits, and child tax credits, among various other benefits. The act also made it more affordable for people under the age of 65 to retire and afford medical benefits. Looking forward, I'd like to take a look at what some leading economic indicators are telling us. First, we see the stock market performing very well. Small company stocks are dominating so far in 2021 and are up over 85% since the COVID crash. Large company stocks and international stocks are also doing well. Companies are beginning to report their first quarter earnings, and there has been a lot of good news coming out. As of April 30th, 86.8% of S&P 500 companies have beat results, and they are doing so by an average of 23.5%. Incredible numbers. Next, let's take a look at orders, jobs, and permits. All good news here. As you can see, all of these measures are now higher than they were pre-COVID. Building permits are up almost 20% over the last year, which have been helped by extremely low interest rates. You can see that rates hit a low around August of 2020 and have started rising but are still at historically low levels. Low interest rates encourage spending from consumers, businesses, and governments as the cost to borrow is low. This is good for economic growth, but not so good if you're a conservative investor, as rates on bonds are very low. So what does all this mean for the average investor? Well, first, we think it's a great time to consider rebalancing your investment portfolio. We have seen a large disparity in returns among different asset classes. If you haven't reviewed your investments in a while, now is a great time to do that. Secondly, if you're a conservative investor, you may need to add in other types of investments to your portfolio to get the returns you need. So far in 2021, the bond market, as measured by the Barclays Aggregate Bond Index, is actually down by a little over 2.5%, and will struggle if interest rates continue to rise. Another thing to review is your tax situation. Given the amount of stimulus spending and recent tax proposals, it is likely tax rates are going to rise in the future. Assuming they do, now would be a great time to evaluate your tax situation and consider making Roth conversions to potentially reduce your taxes in the future. Finally, as I mentioned earlier, the American Rescue Plan includes provisions to help with healthcare costs prior to age 65. If you've continued working to avoid those costs, it's a great time to revisit that. If you'd like our assistance in reviewing your situation, reach out to us. We'd love to help. Thanks.